Finally, or not finally, last but not least, we have Jacques van Heerden, Managing Director of Wits Mining. Mr. van der Heerden has over 20 years mining experience and is based in Johannesburg, South Africa. Prior to joining Wits Mining, Mr. van der Heerden presided over a cobalt copper operation in the Democratic Republic of Congo, overseeing a mining operation and 2 processing facilities. His portfolio also included community responsibilities such as hospital and schooling programs. Please welcome Jacques. Thank you.
Good afternoon, everybody. I'll be a bit quicker than what Brad was, so I'll catch up quickly. Thank you very much for joining me in this afternoon shift, and thank you for the opportunity to introduce Wits as a company to you. I just want to go through the normal disclaimer there, and then we're a small cap company listed on the ASX. Our chairman, Michael, that you can also ask questions at the end of the session to him, he started the company in 2007, and then for which we had a prospecting permit in a renowned gold area in Johannesburg, South Africa. And then we got the prospecting right granted, and then we applied for a mining right. We got our mining right granted last year, July, and that allowed us then to start early development on the project. So you can see there on the slide there in front of you, even though we're a small cap company, we sit with a 4.2 million ounce resource, and there's significant opportunity for us to exploit that resource further. You can see we've got a uranium drilling program that we starting, which I'll get into now. We've got an exploration target there in Mount Cecilia that we have JV'd with Rio Tinto now. And then, you know, we've got the option of also growing the company from the current levels that we're looking to implement now is about 50,000 ounces per annum. And we've got great opportunity to grow that to what we see as an ambitious target of about 200,000 ounces per annum. But I'll get into that now. Right, there you can see a bit of an overview of our company. We currently sit on a market capitalization of about 35 million Aussie. You can see that our current share price trades at about 1.8, 1.9 cents. And I think there's a bit of a disconnect to the current size of the resource that we've got compared to the market capitalization. And we hope that as we develop the project now, I will get into the next stages of development now, but we're very close to starting to develop the project, that we would sort of gain the trust of the investors that we now no longer an exploration company, but we're moving across into a real operation. And I think that's what sets us apart from the other small cap companies. You know, we a couple of years ago, we saw ourselves as an exploration company, but we are one of the few companies that now sort of moves across into a real operation. So there you can see the board that's been supporting us quite strongly. We've got Michael there that started the company in 2007. We've got Hume Scholes, which is a renowned South African mineral rights lawyer. I'm sure that, you know, between Roger and the Deputy Minister here, he's given you a bit of grief in the past. So, so I think we are very well represented on the in our board, and we've got a strong board that supports us going forward. So just a bit of a background of where this project is located. You can see there on the top right-hand slide, that is the Wits Basin. And now the Wits Basin is a renowned gold-producing geological phenomenon that's in South Africa. It's produced gold now for over 100 years now. It's, you know, we've produced almost 250 million ounces just from that area, which, you know, I think it's probably one of the richest gold mining areas. So the benefit that we've got is, we as a small cap company, is that we're starting a project right in the middle of a renowned mining area. We don't have to go into the middle of a jungle somewhere and try and put 2 or 3 borers down. We know that the mining, that the gold is there. It's been mined before, and our objective is to basically continue on mining from where the guys left off previously. You can see there, there on the bottom left-hand corner, that just is a representation of what the current reefs look like. So for the geos amongst us, you'll find that interesting to see that we've got the 3 reef types on our property in our mining right. The focus is going to be predominantly on the Kimberleys, and then the bird reef, and then also the main reef. Now, in the past, the main reef has been mined extensively in that area. That is of a higher grade. That sort of varied from about 8 to 10 gram a ton. We on the Kimberleys, the old-timers have basically seen anything less than 8 grams a ton as waste in the old days, and that's why they left the Kimberleys for us. The Kimberleys are running at about 3.5 to 4 gram a ton, which in today's terms is a significant grade, So we've got the ore body, we've got the grades there, and the geology is very well understood there. The bottom right-hand picture just shows you where we are in relation to old renowned mines that's been operating in South Africa for the last while. And then in the very sort of bottom corner of that same picture, you can see there's Doornkop mine from Harmony. And Harmony is mining the exact same reef types as we are. So there's a lot of information available of the reef that we want to mine. So this slide here shows you, our 4.3 million ounce resource at a 4.5 gram a ton, our overall resource. What's significant about this slide is about 2/3 of that sits in a measured and indicated category. So once again, for the geos amongst us, this ore body is very well understood, and it's a matter of us just getting in there and start mining. You can see there on the top right-hand slide, we've identified 5 distinct mining areas. The first 4 we've put through a scoping study, and then what we call that Bird Reef Central area, that's an area that is slightly lower in grade, but there's a real uranium opportunity for us in there as well. And I'll get to a slide there that explains that a bit. So what it shows us is that we've got about a 2,000 hectare mining right area with a bit of flexibility. We've got 4 mining areas that we can put into operation over the next couple of years. Our focus area will be the Kala Shallows area, and then from there on, we will then develop the other sections. So that's graph that you see in the bottom there. We've put it through a scoping study, and that shows that we've got about a 27-year life of mine in that area. So there's still a lot left. I'll get on to our project 200 that we said that if we condense that, there's a real opportunity to, we see there's an opportunity for us to go from about 150 to 200,000 ounces. That will require additional infrastructure that we can implement, but that's one of the growth areas that we foresee. You can see on that slide there, that the size of the ore body, it's the first phase is going down to about 800 meters. It's about 2,000 meters on strike, and then we've got what we call the Kala Deep section, also an additional opportunity of going even further down to about 2,000 meters. So we know that there's a lot of gold left there, and it's up to us as management team now to really go and exploit this as best as possible. We put this Kala Shallows through a feasibility study, and you can see the results, and that's a recent feasibility study that we completed. We completed one in September last year. And it's amazing that from September last year to now, how some of the costs have changed. For instance, the diesel price that we assumed back then doubled. I think we allowed for 11 Rand a litre last year, September, and now we allowed for about 22 Rand a litre. So it's amazing what the impact was on the cost just for diesel on this whole project. But we also engaged with the mining contractor, and all of that resulted in us getting quite good all-in sustaining cost numbers. You can see there, we're sitting on a all-in sustaining cost of just below 1,100 US per ounce. The NPV on this project is looking to be about 180 million Aussie, and that's just the phase one. 180 million US. And, with a relatively quick payback period, if you consider that we've got about a 3-year development, and then we'll pay back 2 years after that, So we're quite excited to start this project now. You can see there that just that phase one will give us a 17-year life of mine. You can see the bottom graph there. Our plan is to start mining and then build up a stockpile of about 30,000 ounces, and then we will start feeding the plants. One of the things that I missed there now is that the reason why our capex is relatively low at about 63 million US is that we decided not to build a process facility. There's 2 process facilities in the area, and we've engaged both of them to discuss and negotiate a toll treating arrangement with them. I believe that we're quite far advanced with that process, and that will then, the minute that we are able to then announce that, that will then trigger the project funding process, and that will then allow us to start mining as quick as possible, and then that will then follow that graph that you see there in the bottom. Right. So as I mentioned there, we've established site after we obtained our mining right last year, and there's just a little 3D representation of the work that we've done. All the grey work is the old box cut that we've rehabilitated. We rehabilitated the old decline that was down there. So that's now enabled us to open up the mining phases so that the minute that we actually employ the mining contractor and they start mining, the very first blast that they will take will be on ore. And that will then allow us to start with that graph that I showed you on the previous slide. Right, then we've got a little bonus in our area where we've got an exploration target for uranium that varies from about 12 to 16 million pounds that we see as an exploration target. And what we've done now, or what we're currently busy now as we speak, is to drill 3 confirmation holes. The bulk of the work was done in 2007, 2008, thereabouts. So we're drilling 3 confirmation boreholes. We'll assay those, and then that will then be used as a decision to continue with this drilling program to convert our current exploration target into a JORC-compliant resource. So that's an exciting project that we've now embarked on, and then we'll keep you up to date as we progress through this. As I mentioned also in the beginning, we've got a nice little prospective opportunity there in WA, in the Paterson province. We went through a whole aerial magnetic survey last year and the year before, and that then prompted us, or we identified then from that about 8 potential targets. Then Rio engaged us, and we actually signed up with a JV agreement with Rio now, and we're excited to say that we are planning to start drilling there in the next couple of months. In the next month or 2. Sorry, it's actually a bit closer. And then, we're quite excited to see what that's going to yield us. So, and we'll keep you up to date as we find anything. All right. So just the last slide, why to invest in Wits. I'm not going to go through everything there, but we're a small cap company. We see significant growth. We've got a long life of mine project, and we listed on the ASX, and we listed in America on the OTC, and that will give investors or potential investors the opportunity, or we make it quite accessible for people to invest in the company. And then, we've got significant growth opportunities going forward. All right. Thank you very much, everybody.